So you just found your dream home, you put in an offer for $500,000 and the appraisal comes back at 480. You're freaking out, you start to panic, and you say, the appraiser missed the number. What do we do next? Well, that missed number might just be your financial firewall. Here's why having an appraisal, whether you're buying cash or going conventional, can save you thousands and thousands of dollars. Don't ever, ever let that contingency for finance and appraisal deadlines not be set. So having an appraisal done can be your largest negotiation lever, especially if you're buying cash. Just because you can come in and make the transaction smoother, less contingencies, people won't have to wait as long for the financing to occur, because there are a lot of hoops to go through financing. You still want to get an appraisal. More often I have seen over the since 2022, people that are buying in cash, they're turning around and trying to refinance months after they've purchased a home and moved in so they can move their cash back into whatever holdings they had prior. And the appraisal's coming in lower than what they purchased the home for, sometimes by hundreds of thousands of dollars. All could have been taken care of by getting an appraisal up front. Having something like an appraisal allows you to go to the seller and say, here's a third party, neutral party, that said that this purchase price or this list price isn't worth what we've negotiated to pay for, and I'm not willing to come to the table with cash to overpay for a home in this current market, especially in a soft market like we have right now. If it was pre-COVID or COVID market where everything was hot and there was multiple offers, of course we saw a lot of cash offers that were over and above the list price. That was because at that time the market was going so high so quick that they'd make up a $20,000 to $30,000 miss on the purchase price within a few months. But that's not happening anymore. Now we're seeing the opposite happen. Markets that are stable and sometimes a little declining are going to hurt you if you come in and you put extra cash down and purchase a home above the list price, or even at list price on some of these that are listed above what market support is showing. If you're a cash buyer and you don't have to worry about the financial loopholes that you have to run through when you're getting conventional financing, it's still a good idea to get an appraisal. Otherwise, you stand the chance of leaving yourself undervalued the moment you get the keys. Much like when you buy a car and you take it off the lot, it instantly depreciates. You're buying a house. And the house isn't a $30,000, $40,000 car. It's a $800,000 property that you're going to live in, hopefully for a long time. And that's one point I wanted to add on here. If you're going to be in it for a long period of time, you're not needing to worry about refinancing for a better rate, then you probably will be okay, because over time, as in most investments, you'll be able to absorb some of that error. But right now with the rates, I think today they're floating around 6%. That's down a point from 7% at the height. Folks are starting to refinance now, or that have purchased over the last few years, and their home value has not kept up with the needs for their loan to value ratio. So they find themselves a little bit underneath their property, a little house poor when it comes to having to refinance that property. So getting an appraisal that is based on market data, current market data and market trends that are happening today, you're going to find yourself at least having a solid foundation as you move forward under that ownership. You want to make sure that the appraiser is using comparable sales and market trends that are happening now. So if you're looking at listings and those listings are above what the current comparable sales are, be sure to take a look at what the list to sales price ratio is in your market area and your market segment. So what I mean by market segment, if you're buying a home over $1.5 million to $2.5 million in the Alpine, Utah area, what you'll find is the list to sales price ratio there is about 95%. That doesn't take into concessions, by the way. So people are still asking for concessions to pull down their rates, and that could be up to 3%, 2%, on top of the 5% that is coming down from the original list price. So 5% on a $2 million home, that's a lot of money. So if you're basing your value that you think the home should sell for, that you're okay buying on cash for on the listings, you're going to find yourself in a lot of trouble if you're not paying attention to the list to sales price ratio for your market area. Most buyers see the appraisal that comes in low as a deal killer, but it's actually a safety net. It's a financial firewall to protect you both now and in the future of your home ownership. So this is what I'm kind of been paying attention to lately and what I'm interested in the Silicon Slopes, Utah County area when it comes to home valuation and purchasing homes. If you want a little bit of help for your next steps on buying a home in the area, please reach out to me in the information in the description, and we'll talk to you soon.